Hey traders, welcome back to Forex Cracked, where we break down everything you need to know to level up your trading game. Today, we're diving deep into one of the most effective strategies in Forex trading, price action. If you've ever wondered how pro traders make their decisions without using a million indicators, stick around because we're about to show you how they do it using just price action. So, what exactly is price action? At its core, price action is the study of historical price movements to predict future movements. Unlike other trading methods that rely heavily on indicators, price action is all about analyzing the raw data that price movements provide. Think of it as trading in its purest form. Price action is like reading a book without any spoilers. You focus on the story the price is telling you without the noise of lagging indicators. It involves analyzing candlestick patterns, support and resistance levels, trend lines, and other chart patterns. When you look at a candlestick chart, each candlestick represents a specific time period. You can see where the price opened, closed, and the highs and lows within that period. The shape of these candlesticks can tell you a lot about the market sentiment at that time. Let's break down some key price action concepts that you need to understand. First up, support and resistance. These are levels where the price tends to reverse or consolidate. Support is a level where the price tends to stop falling, while resistance is where it tends to stop rising. Understanding these levels is crucial because they act as psychological barriers for traders. Next, we have candlestick patterns. There are dozens of them, but a few key patterns can tell you whether a market is bullish or bearish. For instance, the doji candlestick signals indecision in the market, while the engulfing pattern can indicate a potential reversal. Now that you know the basics, let's discuss how to use price action in your trading strategy. The key is to keep things simple. Here's a three-step approach you can use. Step 1 is to identify the trend. Are we in an uptrend, downtrend, or a ranging market? Always trade in the direction of the trend for higher probability trades. Step 2 is to look for key levels. These are your support and resistance levels where price has reacted previously. Mark these levels on your chart. And finally, wait for price action signals. Don't rush. Look for candlestick patterns, breakouts, or even fakeouts to confirm your entry. Remember, patience pays in trading. Before we wrap up, let's go over some common mistakes traders make when using price action. One big mistake is overcomplicating your analysis. Keep it simple. The more lines and indicators you add, the less clear the picture becomes. Another mistake is ignoring higher time frames. Always cross-check your analysis on a higher time frame to get a better market context. To sum up, price action is a powerful tool that, when used correctly, can give you a clear edge in the market. It's all about understanding the story that the price is telling you and reacting to it without hesitation or overthinking. Start by practicing on a demo account, and as you gain confidence, you can incorporate these techniques into your live trading. If you found this video helpful, make sure to hit that like button and subscribe to Forex Cracked for more trading strategies and tips. Drop a comment below with your thoughts on price action or if there's any topic you'd like us to cover next. Until next time, happy trading, and remember, stay disciplined.